Well, Michele Bullock has conceded that the RBA may have been too slow in lifting interest rates, back when inflation was starting to take off a few years ago. What the RBA governor is implying is that cost of living pressures might not have gotten so bad, and the bank might not have needed to hike so aggressively if it had acted earlier. So when should it have started to lift rates? Probably not June 2021, when there was a reasonable argument that the inflation spike was temporary. Perhaps December 2021 could have been an option, but certainly well before May 2022, which was when the bank belatedly started its rate hiking cycle. By then, it was getting increasingly clear, almost everywhere in the world, that high inflation wasn't just going to magically vanish. To be fair, managing an economy is a pretty tough job, but the end result was financial pain for a lot of people, which went on longer than necessary. Speaking of which, the share market fell 0.3% today, and this week's 3% pain makes it the worst trading week for the ASX in more than 2 years. Guzman y Gomez and Block were some of today's worst performing stocks. Although they reported solid results, it still didn't quite meet the market's very high expectations. Meanwhile, shares of Domain surged 40% after it received a $2.7 billion takeover bid from an American property firm. Now, that also boosted the share price of Domain's majority owner, Nine Entertainment. And Mayne Pharma also jumped after it received a $670 million offer, also from a US company. Overseas, Wall Street slipped from its record high while the Hang Seng went gangbusters. There was also a big jump in iron ore prices, which helped boost the Aussie dollar to about 64 US cents, the highest it's been in 2 months. And that's finance.